So, you're thinking of moving to Las Vegas, Nevada? But you're concerned because all you keep hearing about in the media and with self-proclaimed real estate experts on YouTube is that the housing market is absolutely going to crash. Haven't they been saying that for the last 3 years? Well, I'm here to tell you, you have been lied to. In this video, we're going to discuss 6 reasons why the Las Vegas housing market is not crashing and it won't be in the foreseeable future. You're going to want to stick around until the end because the last point is icing on the cake. And we're going to get after it right now. If you are new to this channel and you want to know everything there is to know about eating, sleeping, working, playing the good and the bad about living in Las Vegas and the surrounding areas, then subscribe below and tap the bell for notifications so you can be the very first to know about the current markets here in Las Vegas. Hi, my name is Mark Pepe, and the team and I get calls and emails every day from people just like you looking for help on making their move to Las Vegas. As a real estate professional here, it doesn't matter whether you are moving in 9 days or 90 days. Give us a call, shoot us a text, or send us an email, and we'll be more than happy to help you make a smooth move to Las Vegas. So, here we are, talking about the top 6 reasons why the Las Vegas housing market is not crashing. There's been a lot of real estate gurus telling you the Las Vegas market is going to tank. Really? Then where are all the foreclosures? Where are all the 50% off deals? Where are all the affordable houses? Interest rates have doubled since early 2022. Inflation has also shot up, or did earlier, to 9%. This has since come back down again. We're about the 3% range. So why haven't home prices crashed yet? That's the big question. You have to look at some of the broader economic trends and other key points that others are not taking in consideration. I want to help provide you with a different perspective prior to you making your big move to assist in restoring some confidence you may have unnecessarily lost in the current real estate market. So, let's jump into our first reason, which is low interest rates equals low motivation to sell. According to Redfin, close to 90% of homeowners have a mortgage rate below 6%, and nearly 1/3 of those mortgage rates have rates below 3%. This has prompted many buyers and sellers to stay in their current homes. High mortgage rates are a double whammy because they're discouraging both buyers and sellers. Buyers are having trouble finding a place to buy because would-be sellers, they're not selling. This locked-in effect likely won't go away until interest rates drop below 6%. A little side note, there are creative ways to get a more affordable interest rate today. A couple of those options include an adjustable rate mortgage, otherwise known as an ARM, which is a fixed rate usually below the 30-year conventional rate for a period of 5, 7, or 10 years. And then the other option is a 2-to-1 buy-down, where you have a lower interest rate for the first 2 years before it rises to the regular permanent rate. If you'd like more details on these options, make sure to reach out to me. I'm more than happy to discuss these options with you further. As inflation continues to decelerate, economic growth is slowing, and the tightening cycle of monetary policy is reaching its apex, which means mortgage rates are expected to decrease later this year and into next year. That would be great news if you went the route of one of these 2 loan options I just mentioned. All of this has led up to a severe drop in homes that are being put for sale, which leads us to our next point, which is supply and demand issues. The problem with the housing market in the US is that we're short 6.5 million single-family homes. Just in order to keep up with population demand, the new home construction rate of single-family homes would need to triple every year for the next 5 years, and that's just to keep up with demand. The demand is not slowing down. We have a significant imbalance on the number of homes for sale versus the number of people who want to buy one. That's right here in Las Vegas and across the country. Until we have a significant surplus of supply, this imbalance is not going to change. Whenever there's a low supply and a high demand, prices normally go up. But supply continues to dwindle because there are not many willing to give up their cheap mortgage rates in exchange for a 7% interest rate. That obviously doesn't make sense, right? Well, with all the talk of a recession and housing prices, many areas of the country, including right here in Las Vegas, are not experiencing price dropping like a rock because buyers have so few options that are coming to the market. Our next point is prices. With home prices skyrocketing over the past few years, many would-be buyers have been priced out of the market. Many thought they were being smart by thinking they would stay out of the market and rent for a while and wait for prices to nosedive before buying. Well, only one problem with that strategy. Prices haven't nosedived. I have heard from a number of clients directly who were of that mindset of waiting. Now, they're super frustrated because of where prices are currently at. Not only with prices, but also where interest rates are, along with affordability that is keeping them on the sidelines. Think about this. In January of 2020, the median single home price in Las Vegas was just $313,000. At the recording of this video, the median number is at $440,000. And that's after a year of home prices starting to normalize. That is a staggering positive difference of $127,000, or a 40% increase in value. Do you think those who decided to wait to purchase a home 3 years ago are now regretting their decision? It's highly likely. Real estate is hyper-local, means it varies from city to city. In Las Vegas, sure, we have seen prices normalize as I just indicated. The double-digit appreciation growth we experienced from 2020 to early 2022 was not sustainable. And today, you have a fair number of sellers still thinking they can get 2021 pricing, which is leading to their house sitting on the market for a long period of time and eventually forcing them to lower their price, and in some instances, drastically in order to sell it. Does that mean home prices are plummeting? Absolutely not. Our next point is months supply of inventory. This is the number of months it would take for all of the current inventory to sell. For example, let's say there's 1,000 homes on the market and 200 sell per month. That means there's a 5-month supply. So the absorption rate is a 5-month supply to sales. To put this in perspective, when you have 6 months or more of inventory, it's considered a buyer's market, where buyers have the advantage and leverage in purchasing a home. On the other hand, when there is less than 6 months of supply, it's considered a seller's market. Supply in the Las Vegas Valley has been declining. In fact, we only have 2.1 months worth of supply. Are you kidding me? Oh my goodness, this is an extremely low number. With the active market we currently have here in Las Vegas, the fact of the matter is, until inventory is replenished to keep up with demand, you're probably going to see prices continue to increase, which is obviously advantageous for sellers. Our next point is baby boomers. What do baby boomers have to do with real estate? Well, there's a huge population of retirement age people who will be over the age of 65 by the year 2030. Many of them are flush with cash as a result of working, investing, and saving over the last few decades, and they all will be retiring around the same time. Many are moving to warmer weather cities with lower taxes where they can stretch their dollar further while enjoying retirement lifestyle, which makes Las Vegas an extremely attractive option as it checks all of these boxes. If you combine that with the addition of new retirement communities popping up all across the Las Vegas Valley, you can see why Las Vegas is quickly becoming one of the top cities in the country to retire in. Our last point, and this really puts everything in perspective, and that is history. This is the one tool that positions us to see patterns that we might not see otherwise, that are invisible in the present. And that again is history. There are two important historical events that took place in real estate history. The first was in 1979, when inflation was completely out of control at the tune of over 11%. And we thought 9% was bad. But even in that recession, home prices increased significantly. From 1970 to 1982, the median home price in the US appreciated by 159% in a terrible economy. The second event was more recent, and that was the financial crisis of 2008, which so many so-called experts are saying is going to happen all over again. The subprime mortgage meltdown was caused by some really shady loaning practices. But the good news is banks can't do that today. Back in 2007 and 2008, banks were giving out home loans to people whose financials were compromised and at risk of not being able to pay back their mortgage. In 2007, the average credit score of a subprime borrower was 620. A lower credit score is an indicator that a default of a loan is much greater, but lenders were greedy and still provided loans when they had no business doing so. They got their hands slapped for those poor decisions. Fortunately, the days of lenders freely handing out loans with low credit and marginal income is gone. Today, background checks are much more thorough for loan applicants, and the median score of borrowers is currently at 768, a far cry from where they were 15 plus years ago. So, borrowers in most recent years are well qualified and highly likely to provide a decent down payment so that they are at a much lower risk of defaulting on their loan. So, why are we not seeing the Las Vegas housing market crash? As I mentioned earlier, over-aggressive listing prices are forcing sellers to reduce the price of their home. Again, the double-digit appreciation growth we experienced from 2020 to the early 2022 was not sustainable. But nowhere in the Las Vegas market is there a buy one, get one half off sale. Even with high prices, I'm still finding my clients great opportunities. They're out there if you know where to look and what to look for. The bottom line is, the longer you wait, the higher the prices are going to rise. Well, this gives you a good overview of the top reasons why the Las Vegas housing market is not crashing. It's important to look at the facts, along with history, and not get overwhelmed by all the doom and gloom that is out there. Real estate has been and will continue to be one of the best long-term investments you can make to build wealth. Don't wait to purchase real estate. Purchase real estate and then wait. I hope you enjoyed this video and found it informative. So please like and share this video. Please subscribe below and comment if you have any questions or found this video helpful. Also, be sure to check out our other videos on Las Vegas and the surrounding areas so you can continue to get a realistic sense of what it would feel like to live here in the Las Vegas Valley. So whether you're moving in 9 days or 90 days, give us a call, shoot us a text, or even schedule a Zoom appointment here in the description below. We can't wait to help you make a smooth and stress-free move to Las Vegas. So until next time, we hope to show you around town very, very soon.